if the Federal Reserve were to be the central bank to the world, and that's debatable, but if it were, would it actually be much more dovish than it currently is?
Well, I think the challenge is that the Fed is looking at a number of areas here. First of all, the domestic economy. When you look at the three things, growth, inflation, the labor market and growth are doing okay, but inflation has been consistently undershooting. But if the Fed did have to be the central bank for the rest of the world, the Fed potentially could be more dovish. They're looking at weaker growth as a function of slowing Chinese growth, slowing growth in Europe, and also the trade wars that the U.S. started. I think the central bank might be a little bit more dovish. But again, the Fed does have to think about the U.S. economy in its decision making.
Right, but if it were to only focus on the U.S. economy, would it actually be more hawkish than it is?
Yes, potentially, again, because two out of the three things I mentioned just before are doing well. But I think what's important is that Powell is probably going to give a sense of, well, we're watching things, and certainly should the external environment worsen, should the uncertainty increase, should financial conditions deteriorate, that we are ready and we stand ready to act if we need to.